You're listening to Indications by the Conference Board.
Hello, welcome to this episode of the U.S. Labor Market Roundup, our regular podcast series where we break down the monthly U.S. Bureau of Labor Statistics jobs report and identify key trends in the U.S. job market that business leaders should know about. We also unpack some of the relevant policy implications for the future workforce. I'm Elizabeth Crowfoot, Senior Economist at the Committee for Economic Development of the Conference Board. Today we'll be discussing the July jobs report, as well as digging into some of the labor force dynamics that are hindering women's labor force participation. But first, let me introduce my two regular guests and fellow labor market experts. First, Gad Lebanon, head of our Labor Markets Institute and a regular contributor in Forbes. And Frank Steemers, Senior Economist at the Conference Board, focusing on U.S. and global labor markets. Gad and Frank, thanks for being here today.
Thanks, Elizabeth. My pleasure.
Yeah, thank you, Elizabeth.
So there was so much to like about this jobs report in particular, so let's dive right in. U.S. employers added 943,000 jobs in July, and the unemployment rate fell a whole half a percentage point to 5.4%. We also saw substantial upward revision in job gains for May and June, recording an additional 119,000 jobs over this 2-month period. And that makes it the second month in a row that we've seen close to adding 1 million jobs. As has been the case in the past several months, the leisure and hospitality industry drove total employment growth in July, making up 40% of job gains. New jobs in restaurants and bars alone made up over a quarter of these gains. And nearly another quarter went to local government education, but that's partially the result of that tricky seasonal adjustment that's inflating true job gains in education. And that's because teachers have been in demand relatively more over the summer than in previous summers due to all those catch-up summer school sessions that kids have been in as a result of COVID learning losses. Professional and business services, transportation and warehousing, and healthcare also saw some nice gains. And employment in construction picked up a little after 3 consecutive months of job losses. Retail trade was by far the weakest part of the economy. Most segments of retail, from grocery to furniture to garden supply stores and car dealerships, saw job losses. The unemployment rate dropped substantially for all demographic groups, men and women, white, Hispanic, and Asian workers, and especially for Black workers, whose unemployment dropped a whole percentage point to 8.2%. And that's still highest of all the groups, but it's a huge improvement. But unemployment rates are still about 2 percentage points higher than pre-pandemic levels for all groups, except for Asian workers, whose unemployment rates are still about 3 percentage points higher. The labor force participation rate ticked up slightly, but overall, we still haven't seen any real improvement over the last several months, especially for women. And Black workers saw a large setback. Their labor force participation rate dropped almost a whole percentage point in July. Finally, wage gains. On an annualized basis, average hourly earnings increased a solid 4% in July. But when we look at the recent month-over-month trend, wage growth has started to slow down a bit. More importantly, however, recent wage gains have not kept up with inflation and real wages are declining. Overall, we're now 5.7 million jobs below pre-pandemic levels. And we have to note that this jobs report highlights the state of the labor market prior to the recent surge in the Delta variant, which could be a game changer. So with that set up, let's turn to our labor market experts. So Frank, turning to you first, I mentioned that wage increases are pretty solid in July compared to a year ago, but overall they're starting to moderate on a month-to-month basis. What does this tell us about the development of labor shortages over the past few months?
Yeah, great. Thank you, Elizabeth. I think once we, of course, started this year in 2021, all of a sudden we had this reopening. And then once we were looking at many of our labor market indicators, we saw all of them quickly rising. So, for example, the National Federation of Independent Business, they have this question about job openings and how difficult it is to fill them. And this measure was quickly rising and is now at historic highs. When we looked at job openings from the BLS at quits rates, we saw kind of the same picture. Also, wages were quickly accelerating. The average hourly earnings were showing that. The latest ECI data for the second quarter was showing that. we had employment growth in April, May, which was below expectations. So people were really wondering, okay, what is this labor shortage even doing to job gains? So to your question, if this moderation in wage growth, what is that saying now about the current development of labor shortages? I think it's still a little bit difficult to say if it has peaked, if like a moderation is showing that employees have less difficulty finding workers. Like, for example, if we look at the NFIB, it hasn't been accelerating further, the difficulty to fill open positions, but it's still very high. The same for wage growth, even though it's maybe now slightly decelerating, it's still very high. So still indicating that a lot of employees have still a lot of difficulties filling their open positions. Focusing, for example, only at leisure and hospitality, especially there we see strong wage gains. And actually only in the last month, I think in the jobs report, only then it showed a slowdown. So it could also still be some volatility. I think overall my expectation would be that labor shortages start to ease towards the end of the year. As I think we know in September, the unemployment benefits expire. So that may be an incentive for more people to join the labor force again or to start looking for a job. Schools are reopening. So that could help ease some of the labor shortages over the coming months. But I think it's for an economist an interesting period. I think we should continue to look closely at the data, but also be careful to not already make too many conclusions out of a few months, because sometimes all of a sudden wage growth can start to pick up again.
I think it's interesting that you mentioned the job openings data, because there are actually now more job openings than unemployed people available to fill them. And that is getting closer to where we were pre-pandemic with also a very tight labor market. So essentially, with that easing of wages too, or at least wage growth, it could also be a sign that, that mismatch or that disconnect between the opening of the economy and the available labor supply is starting to balance out a little bit. I mean, there's still a long way to go, but perhaps those pressures are easing somewhat. I really wanted to also dig into some of the data by demographic group, just because we often talk about groups like men and women, Black and Hispanic workers as one group, but there are a lot of nuances in the data that highlight the fact that it's not just one labor market experience for women or for Black workers or even men. There's all these other elements of diversity, for example, being a person of color, being a woman, being a parent, being part of the LGBTQ plus community, and all of these, like an onion, layer on top, different challenges that affect people's experiences in the workforce. And to add to that complexity, I think a lot of the headline labor market data, like the unemployment rate, for example, mask a lot of the movement or what's going on. For example, unemployment rate for men is 5.6%. In July, and for women, it was 5.2%, so substantially lower. But we know that doesn't mean that women are faring better in the labor market. It's actually that they're having to step back or leave the labor market entirely because of some of the challenges. So looking at other metrics is important. And one of the ones I like to look at is at the percent of employment declines relative to pre-pandemic levels. So when you look at this data, it's interesting that overall for men and women as a whole, both groups have seen about 4% declines in employment compared to pre-pandemic levels. And the same thing for white men and white women. It's about 4%. But it's when you look at Black men and Black women and Hispanic men and Hispanic women where you see that disparity really come to light. So, for example, Black women have seen almost a 7% decline in their employment levels compared to about 3.5% for Black men. And for Hispanics, the women have seen about a 5% decline versus for men, it's closer to 2%. So there's this huge disparity there. And same with the age range 25 to 54 workers, and there's mostly women that have children in this sort of middle age range, and also women there have seen more employment declines than men of the same age grouping. So what that really means is that there's been more exits. Women have made up over half of the workforce exits in July, and a lot of that is also driven by their workforce or labor force participation rates. And again, when you look at those rates for men and women, generally the decline relative to where it was pre-pandemic is about the same. The same for white men and white women, about between 1 to 2 percentage points lower than it was before. But it's when you look at this disparity between women of color, for example, when you look at the comparison of Black women to Black men, Black women have seen a decline in their participation rates of 3 to 4 percentage points versus about just 2 percentage points below for Black men. And it's similar for Hispanics as well. So you see these really large gaps in that workforce participation recovery. And it's also a story about mothers and parents in general. So we see that mothers that have younger children, so below age 12, for example, they have had a much harder time clawing back employment from the depths of the pandemic. Women that have older children, so teenagers, for example, have had better luck and have been able to return to the workforce at higher rates than mothers with younger children. And fathers have also had lower participation rates throughout this whole experience, but not to the extent that mothers have. So there are really some implications around this.
Elizabeth, if I
Sure,
can
sure, sure.
just a question about like the teenage mothers. So you're saying that they have been doing better in terms of employment. Do you think that this is related to school reopenings, so that teenage children could go back to school on their own and younger children could not?
I think it's mostly the fact that older children are more autonomous. I have a 4 and a 5-year-old, so I can give you firsthand experience as to the level of attention that younger children need relative to the older children that I think are able to do that remote learning on their own for the most part, or that are able to handle that and don't need a parent, hovering over their shoulder. But, those are definitely considerations that enable a mom to maybe do a part-time job if they have an older child, for example. So those are all considerations in getting women back, which women are able to get back to the workforce more easily, which sort of brings me to some of the implications, because we know that the women that are most affected are women of color, the mothers, but also women in senior level positions. Because women are having children at older ages, a lot of these women in senior roles have school-age children. So they've had to step back from the workforce, for example. So we've seen that COVID has really exacerbated a lot of these gender and diversity inequities within leadership ranks. So positions like, senior managers, vice presidents or directors or senior vice presidents, all of those pipelines into C-suite or executive board positions, even those have seen a decline in representation of women over the past year or so. So even though there's more awareness around these gender imbalances because of COVID, because of the Me Too movement, there has still been a step back in terms of that representation. So it'll be interesting to see what happens in September when schools go back in session, hopefully completely in person, and women are able to increase their participation if Delta doesn't get in the way of all of those aspirations. So, Gad, Delta has been rearing its ugly head, and we've been hearing so much about it in the news, the surge. It's, really been hitting certain parts of the country. Schools have been closing down. Summer camps have been sending kids back home. What kind of impact is Delta going to have on the employment outlook looking ahead?
Yeah, no, I do think it will have an impact, especially on the kind of in-person leisure services. I saw already some measures that show that while those still increase in July, in August, some of those measures of activity plateaued, like the number of people in indoor restaurants or in sit-down restaurants, and number of flights or people in flights plateaued in August. So I think that suggests that probably the rapid growth in business activity in leisure and hospitality is likely to slow down, and with it probably employment. So I think that will happen. I think especially there are some groups that are going to slow down even more than others. Older people who are more at risk because of COVID, they're probably going to go less out and about and spend, especially in categories where older people disproportionately spend more, like vacations and travel and restaurants. And also the group of families with unvaccinated young children may be more careful. Elisa, you have 4 and 5, so are you being more careful than you were 2 months ago?
Definitely. Yes, it's something that I think about every day.
Right. So I think that group may also scale back perhaps, or not continue to increase their spending on leisure, outdoor leisure related activities. So that's kind of from the demand perspective. I think it will be impactful, but also from the supply of labor. One of the couple of the reasons why the supply of labor was surprisingly low in recent months was the fear of COVID and the fact that schools were not completely reopened in person, and that prevented people who were afraid of COVID and parents from going back to the labor force. We expected those things to be over soon, before Delta started expanding rapidly. But I think people are still somewhat, maybe less, but still somewhat afraid of COVID, and schools may not fully reopen in August, September. So some of those obstacles for going back to labor force participation may still be there. Another important question is how many more months will Delta be an important factor? One thing we know is that Delta is extremely contagious and could run through a population that kind of is not sheltering at place very quickly. And, if you look at India, for example, it did strike them for several months, but then the number of new infections dropped dramatically. In the UK, there was also a drop, although a more mysterious drop. So it could be that this increase in Delta is more of a matter of 2-3 months than 6-9 months. And if that is indeed the case, hopefully towards the end of the year, we will see the economy and the labor market fully recovering or moving faster to full recovery.
In terms of that timeline and sort of going back to that focus on women, if there is this surge in COVID and schools may not potentially be able to reopen, even if it's just 2 or 3 months, that can also have a further impact on women's ability to return to the labor force. And we know that the longer that these women are out, the harder it is for them to come back, the more likelihood that they're going to become long-term unemployed. So it has huge implications for their participation.
Yeah, I think that's correct. And even it could have an impact on parents, even if there is not full closure of in-person school. And it may be a school that is in general open, but then there is a COVID surge there and they decide to close it for a few days. And, it's still a problem. What do you do then? So maybe parents would be, especially mothers, would be more hesitant about going back to work until they are more assured that the problem is completely over.
Mm-hmm. Well, I think that's a great place to leave it for today. I've been speaking with Gad Lebanon and Frank Steamers from the Conference Board Labor Markets Institute about the main insights from the July jobs report. Gad and Frank, thanks again for joining me.
Yeah, great. Thank you, Elizabeth.
Yeah, thank you very much.
And thanks to all of you for listening. Please join us for the next U.S. Labor Markets Roundup as we discuss the August jobs report. Don't forget to subscribe to both the Indications and Sustaining Capitalism podcast series from the Conference Board through your favorite podcast app. Thanks again for listening. I'm Elizabeth Crowfoot with the Committee for Economic Development of the Conference Board.
This has been Indications from the Conference Board.